Hello students, welcome to my YouTube channel Sun Academy. Today in this lecture we are going to solve a question of accounts of business purchase in financial accounts for FY BCom. As you can see, the given question is Brahma Limited was formed on 1st April 2020 with authorized capital of 10 crore as 10 lakh equity shares of ₹100 each. Brahma Limited acquired the business of Mr. Suraj and Chandra. Balance sheet of Suraj and Chandra on this date was as follows. Balance sheet shows capital of Suraj and Chandra 3 crore and 2 crore, while under non-current liabilities 8% loan is 1 crore, under current liabilities trade payables are 1 crore 25 lakh and other 75 lakh. While under the heading of assets, non-current tangible assets are 4 crore, intangible which include goodwill 50 lakh, investment 50 lakh, while inventory is 1 crore, trade receivable 1 crore 50 lakh and cash equivalent 50 lakh. The terms of purchase are building is to be valued at 5 crore and inventory at 80 lakh, others at book value, goodwill is to be given as 1 crore. Company will issue 5 lakh equity shares of ₹100 each at 120 and balance cash for purchase consideration and remaining shares to public at ₹150. Prepare journal and accounts, balance sheet of company. Under note 1, tangible fixed assets, building shows 4 crore 50 lakh and furniture 50 lakh. Now students, you can see that this method is net asset method, as we are being asked to pay the sum amount of assets that is described and balance in cash. So first we will find the net assets of the firm so that we can calculate the payment of purchase consideration, or what will be the purchase consideration. So first of all we will find net assets. For that, first we have to consider the value of assets. Now as in the additional information it has been said that a building is to be valued at 5 crore. Building will be valued at 5 crore. Then after inventory, that is to be valued at 80 lakh. Goodwill, company is giving itself goodwill to the firm, and that is 1 crore. While value of furniture is to be taken at book value, which was 50 lakh. And other assets included investment, that also 50 lakh. And trade receivable 1 crore 50 lakh. Cash, that was 50 lakh. So 5, 6, 7, 8, 9 crore 80 lakh is the total value of assets. From this we have to subtract the liabilities, which includes 10% loan, and that is 1 crore. Trade payables, that are I think 1 crore 25 lakh, and other liabilities that are 75 lakh. So total of the liability is 3 crore. In this way, value of net asset is 6 crore 80 lakh, and that is purchase consideration. Now payment is to be done. Payment of PC, purchase consideration. So that is to be paid as equity share capital and balance amount in shares. Equity share capital, that was 5 lakh equity shares of 100, that will be 5 crore. Securities premium thereupon was 20 rupees, because shares are to be given at 120. So 1 crore will be the value of security premium, and balance amount in cash. We have to pay 6 crore 80 lakh. So 80 lakh will be paid as cash. Now for this we have to write journal. First of all, goodwill will be debited. That is 1 crore. Then after was building. And that was 5 crore. Inventory 80 lakh. Furniture all assets are to be debited. Furniture is 50 lakh. Then after comes investment. That was also 50 lakh. Trade receivables 1 crore 50 lakh. And at last cash and cash equivalent, that is 50 lakh. All assets has been debited, then after liability will be credited to 8% loan account 1 crore. Trade payables 1 crore 25 lakh. Other liabilities are of 75 lakh. And to Suraj and Chandra, purchase consideration will be credited to Suraj and Chandra account, and that is 6 lakh, 6 crore 80 lakh. Now Suraj and Chandra's account will be debited, and what was given to them will be credited. Six crore 80 lakh to equity share capital account, that is 5 crore, to securities premium account, that was 1 crore, and last to cash account, that is 80 lakh. Now remaining shares were issued to public at 150. So bank account will be debited 7 crore 50 lakh to equity share capital account 5 crore, 7 crore 50 lakh, and 5 crore to capital and to securities premium account, that will be on 5 lakh equity shares at 100 rupees capital will be credited, with 50 rupees security premium account will be credited at 5 lakh. Now you see, I haven't written narration. If a narration is demanded, you will have to write. Now we will prepare balance sheet and cash accounts and notes regarding the balance sheet. Now first we will prepare cash accounts. So on the debit side I will write to Suraj Chandra. Cash which was taken off the firm was 50 lakh. To equity share capital, that was 5 crore which were issued to public. Security premium 2 crore 50 lakh by Suraj Chandra. Cash which was paid as purchase consideration, that was 80 lakh, and balance will be by balance CD. This is 7-8 crore. And balance will be 7 crore 20 lakh, total 8 crore. Now if we come to balance sheet, share capital, so note 1, share capital under share capital 1 lakh equity shares of rupees 100 each. Total 10 crore, out of which 5 lakh equity shares were given other than cash to business vendor. that means Suraj and Chandra. Note number 2 will be tangible fixed assets. Under that is building 5 crore and furniture, that is 50 lakh. So 5 crore, 50 lakh. Now if I come, share capital is 10 crore, security premium, that was 1 crore to Suraj and Chandra and 2 crore 50 lakh to public, so 3 crore 50 lakh. Under non-current liability, 8% loan, and that was 1 crore. Trade payables were of 1 crore 25 lakh and other liabilities were of 75 lakh. So 10, 13, 14, 15, 16, 16 crore 50 lakh is the total of liability side. If we come to assets, tangible fixed assets were of 5 crore 50 lakh. Goodwill were given as 1 crore. Investment was as it is of 50 lakh. Trade receivables were of 1 crore 50 lakh. Inventory, that was 80 lakh. Then after cash, that will be taken 7 crore 20 lakh. Now if we come to total, 5, 6, 7, 8, 9, 9 and 7, 16 and 50 lakh, 16 crore 50 lakh. In this way, first of all, you have to check which is the method, net asset method or purchase consideration method. In net asset method, it has been said that value of asset is to be calculated so and so and remaining asset at book value. When it comes to pay the purchase consideration, so that will be said that some amount of equity shares and balance in cash. So first you have to find net asset, which will be the purchase consideration. Then after we have to write journal, assets will be debited, liabilities will be credited and difference to business vendor. Then after business vendor's account will be debited and what is to be paid will be credited. Here remaining shares were issued to public, so bank account was debited and share capital and security premium was credited because share of 100 was issued to public at 150. So 100 were credited to capital and 50 were credited to securities premium account. Then after we prepared cash account, on debit side cash was written which was taken from Suraj and Chandra, the business vendor. Then after shares issued to public, on credit side the cash which was paid under purchase consideration and the remaining amount was as a closed down balance. When it came to prepare balance sheet, we had to write share capital 10 crore, reserve and surpluses which included securities premium 1 crore issued to Suraj Chandra and 2 crore 50 lakh to public. Then after under non-current liabilities, that was 8% loan, trade payables and other liabilities. Under tangible fixed assets, that was building and furniture, intangible goodwill, investment, inventory, trade receivable and balance of cash. Now if you want to learn these kind of typical and hard sum, why hard? Because if you practice 3 or 4 hard sum very well, then when you sit for easy sums or short sums, that will be very easy for you and it will be very convenient for you. That's why I have taken the figures in crores, because if you see on Google balance sheet of any company, you will find all the figures in crores, not in lakhs, even in 100 crores, 300 crores. Because today if you see in practical world, if there is a businessman, very good businessman, then he would have been doing business in 100 crores. So when it comes to company, obviously they play in 100 crores. That's why I have taken figures in crores. In the books you will see all the figures in lakhs or thousands. So if you practice in thousands and lakhs, you are not going to very well with figures in crores. Now if you want to continue to learn this chapter, do follow regularly my channel. If you haven't subscribed, do subscribe. Advise others also to subscribe, comment, share the link of my videos. You will see that here in my video I have solved the question what was prepared by me. But if you come personally with me, you can see that many of questions I don't need to have a textbook, because many of questions are in my mind, even answers. So if you want to reach on that position, visit my class.